Good morning, everyone. Welcome to the room. As you know, trading futures does involve risk, not suitable for all investors. Information in the presentations for educational purposes, not a trade signal, service not intended to be financial advice. Hope everyone's off to a good start today. So kicking off the day with this gap down, and in yesterday evening's video, I talked about the importance of those unfilled gaps. We had the one up here that we moved up to on Friday, and then today we're moving down to this unfilled gap from Thursday. So that targets us down like a 28.15. So we'll see how the morning shakes out. Breath at 7 to 1, negative 7 to 1. And minus 1400, that's nice and strong, or extra weak, however you want to look at it. So we're at Thursday. Is that what it is? Thursday's gap fill. And then we've created another gap above us here. Something like that. In the first few minutes, I just kind of ignore these extreme tick readings. First 5-minute bar is in play. Our first 5-minute setup would be in play today. So we've either got a move up to fill the gap and do that today, or the gap down, we've already filled this gap here and move lower, and then the scenario that doesn't really help us with that 5-minute play is to just move sideways from here. So let's see what we get. I like it when that first 5-minute bar is less than 4 points, regardless of the volatility that's been going on in the markets, and we're already at 6 points. Like yesterday, we had a little gap down. It wasn't a gap outside of the prior day's range. A little bit of directional move in the first 20 minutes, and then pretty solid directional move in the up direction. So even though you might have some days that aren't like trending the entire day, like from open to close yesterday, we kind of ended close to flat. There's, these trends within the day that make up better days, or you could have a range bound day that's a really good day that has some good trends within it. So it doesn't just have to be a trend on the daily chart. So I'm not going to take this first 5-minute bar. It's a little bit big. And the reason for that is a lot of times if you have, some really big candles in the first, 6 points isn't that big, but relative to what we've seen, that can shake you out more. And even if it, like even here, what was this, the fourth last week? So even if you do get a little bit of trending action, like off of this first 5-minute bar, we trended up, but look at what followed. You have a little bit of um, shakiness, or you come down and you break a candle's low, and then you break the candle's high, and then you break a candle's low. So it's a little choppy on the way. And then if you look at, like, okay, if we're going to trail here, there's really not much distance between the top of this first 5-minute bar and the low of, say, the highest bar in the rally. And so that can be a little bit of a, it can just shake you out a little more. And I think that's already what it looks like here. Yeah, see, exactly. We just ticked below the low by 2 ticks, and then we've already just kind of moved back up to the middle of the bar. So 4 points is a little bit of an arbitrary number, but just from my observations over the years, I find that if I'm going to use a point stop or a 1.5 stop, giving me it's not so much based on it. Well, it has to do with the chart, but sometimes it's more important to take your strategy, put all those numbers into Excel, go through all the numbers or whatever trading journal you use, review all of your trades, and try to pull out some things where you can say, all right, I'm seeing that on all of my winning trades, I'm really only taking, 4 or 5 ticks of heat max. So I've got the stop out here at 2.5 points, but 90% of my winning trades are only going against me by, we'll say, 1 point. Well, okay, let me set my stop at 6 ticks so I can reduce some of those losses on the losing trades, tighten that up. And then those kind of adjustments, they're not really based on, the chart. They're more based on when I say things like the numbers need to make sense. Those adjustments come from the numbers and not so much the chart. And that's where, the entries are important, and it's helpful, especially with futures, to be able to pinpoint some things. But at the end of the day, the numbers have to check out. And that's probably my biggest challenge that I faced over, when did I start E-mini Mine? 2009, 2010. So in almost 10 years, with kind of sharing my thoughts with folks and conversing, and then as of late working with traders one-on-one, conveying or transferring, my insights and what I'm seeing, and why I decided to pass on that first 5-minute play, for the reason I just said, where we're getting a down move, but with a 6-tick stop, you'd be taken out on the upswing before it had a chance to move down, just like an FOMC meeting announcement. You could pick the right direction, but in order to stay in the trade, if you put on a trade right at the announcement or just before it, you're likely to get stopped out before it actually goes your way, and then you're not in the trade and you're not making money. So conveying some of those little nuances, or if you want to call it intuition, that's been probably the hardest thing with trading, and at least this side of it, like, talking with you guys and um, working through things. So we'll see what we can get. Yesterday morning, we didn't get a whole lot until the very first halfway, like full halfway back. And so we'll see if that's the case again today, and being able to draw up retracement from the high of the day to the low of the day. And let's make a couple reference points here. So we're already below yesterday's, yesterday's low, obviously, but Friday's low, and filled that gap. We know that the target is down here at 28.15. We have really one swing low below us at 28.55. And if we draw from lows to highs to draw the opposing, what do you know? That's right about where we're at, 29.07. So this first 30 minutes should be fairly helpful today to get an idea of, if we stay within the first 30-minute range, I'd be very surprised. But if we move above it, then there's a good chance that we could come up and fill this gap today. If we move below it, then we could kind of fall off here, and if we break 28.95 to the downside, then it'd be likely that we get one of these bigger body candles, gap and go kind of day. But again, being able to pick the direction, that's great, or assess the direction, but you still have to be able to hang on to a trade. I have started posting my swing trading watch list as well in the dashboard next to the market profile, and just kind of highlighting, okay, these are the trades I'm in, these are the trades that are setting up that I'm looking to get in the next day. So if you want to follow along with that, you can. And the idea with that is, on a day like yesterday, you're waiting for when the market's going up. A day like yesterday, I'm looking at my short list. I'm not looking at my stocks to buy. When we were down here, after the market had gone down, and the stocks that I pulled that were making 52-week highs earlier in the week, I'm looking at those after the market went down for entries on a pullback, and then looking to short the stocks that were making 52-week lows earlier in the week on a bounce. So I'm kind of always doing the opposite. Oh, the market went down. Let me take a look at my long list. The market just rallied. Maybe my shorts got some lift. Rising tide lift all ships kind of a phenomenon. Maybe my shorts will get some lift, and then that'll be a better price for me to jump in at. So for these gap fills, if you think of it in terms of, okay, if I'm long, you can do a couple of things. You can get long on this day over here on the 3rd, and hang on a second, we'll come back to that. 73, just looking at this triple bottom here. Getting a little reversal bar, or we have a little reversal bar down at this 50%. And I'm watching this triple bottom for a potential long setup here, but we're in a high tick, so I'd like to see those ticks come down to like a minus 800 and then jump on this without touching. What's the number? 2911s. Still in a pretty high tick. This one's not gonna go, or this one's not gonna put a trade there. So what I'm doing is I'm watching coming down. You can see the ticks have been uptrending here, but at the time where it was getting close to the 2908, it was, the ticks were basically up here at a high tick. And now this reversal bar here is followed by, hasn't closed yet, but selling versus follow through. If you break the high of a low bar, so this is the low bar here, this green hammer candle, almost hammer. If you break its high, I want to see follow through with a bullish bar. And you usually don't do this type of situation where you break its high, sell off, and then kind of come down towards the lower end of the candle and chop around. It can happen, but remember, you're looking for similarities between the good setups or the good trades, and the good trades would break the reversal bar, boom, and go. This one has spent some time chopping around here. Doesn't mean that it still can't go, but remember, chopping around can lead to getting stopped out. Yeah, so we've still got 2 full more minutes. That's why, the daily chart especially doesn't really give you a lot of information intraday, like the developing daily candle. But nonetheless, I like to see as soon as we break above the high of the lowest candle's bar, like I don't want us to be trading down here. If we're like moving around up a point, down a point, up a point, down a point, I want us to be doing that up here after we've broken the high. So, and then as we transfer that over to the 512 tick chart, we have this structured downtrend, lower highs and lower lows, and then what do we have here? This sideways movement. So what's going on within the 5-minute bar equates to sideways movement over here in the 512. And I would, for those that are either newer or coming from a situation where you've got a lot of stuff on your charts, you could go make things as simple as just having the 512 tick chart and nothing else. It might seem like having more on your chart is helpful, but in a lot of cases, it can be more hurtful than helpful at times. Okay, so now we're breaking. yeah, exactly right, David. Simple is better. Now we're breaking the low of this next candle that pierced the prior candle's high, and this one, now that we are kind of back in trend, should lead to some follow through. So we are at 29.0550 is the next short from the swing high before. If we take this high, it's pretty close. You could split the difference, but 29.0550 puts a stop at 07s, which is above the 61.8 and above, what is this? 07s is just about that 61.8. I'd maybe use a 75, 29.0575 if we can get there. We haven't touched the full halfway back yet for the day. So if I take highs of the day down to any of the lows, we have not rallied into that level yet. And this 29.07 is the halfway back long for the opposing daily. So it would look like low to high there. And we're kind of right in this range as well. So there should be a lot of back and forth, or a lot of, day-to-day movement, because this range was pretty big. There's our 575. Let's see if we get a sell-off from here. The reason I use 575 is just kind of getting a little closer to this upper retracement. This one, where it's using this swing high versus the one lower. Just kind of splitting the difference, if you will. Getting a 51. That was a 51 in a somewhat high tick, but if it doesn't go down from here, then we should hit halfway back of the day no problem, and either go down from there, or this will be it for the down move and we rip. I realize we're kind of going against the daily 29.07. That's a risk you face. Already got a point move out of it, but needs to go 2 to get that first target hit. So we'll wait and see. There's a break of the opposing long by just a tick. When you break the opposing, you could use that as a signal to tighten your stop, as opposed to breaking the swing low. But you do risk it coming back out, or coming back up, double topping, and maybe just ticking you out and then rolling over. So usually it's not worth it. 575, got to stop at 725. That's above the 61.8. It's only a few ticks higher. It's really not. And in some cases, yeah, here it's not even an option to tighten. But getting that kind of happened yesterday. You broke the opposing by a tick, and then it reversed in the other direction. Which was a little sloppy yesterday, but we'll wait and see. Definitely players on both sides today with these tails. You've got a tail to the downside, tail to the upside, tail to the downside again. Means you got bulls and bears both fighting, pushing, and it makes sense. You've got the daily long, you've got the gap down, lots of different strategies in play here. And even here, like, it goes down and then it gets pushed back up to the 50 and back down to the 50 long and up to the 50 short and just back and forth and back and forth. Yeah, exactly, David. Lots of time frames in play here. Breath still pretty weak, but the advanced decline line is still very weak, but the breath did come in quite a bit. It was at -7, and now we're below -5. So the volume that was in stocks moving down is actually less, even though we're lower than we were before. So that's a little bit of divergence. We'll see if we break this low, if we can come down and break the low of the day and just do it briefly, like just a real short break and then boom, turn around. That might be a likely scenario. Give her one more tick and we got our first target here. I didn't see any major news today, Stephen. Let's pull up the calendar again. The hardest part about ES trading is that start of the trade. Once you can get away from your entry and get a first target hit, then it managing the trade, there it is, becomes pretty easy. In terms of, there's a structure to follow. You've already got profit locked in. So now that that's occurred, we've got the negative 23% target down here at 290150. It's been pretty choppy, so this is why I was thinking we would break lows by a tick and then see some bounce. So if you want to get aggressive with the stop, the first place to do it would be a 290575. So basically, that brings your stop to break even, but not just in an arbitrary way, in a way that's using the chart. That's likely going to get hit, but at least it prevents you from coming all the way back and retesting, and then like popping through the 61.8 and then rolling over. But if we don't come up and we just roll over, then you're safe and you're locked in. So the swing high before breaking lows is a 625. Gives you 2 extra ticks of wiggle room. But again, if we're gonna go down, just like we broke highs up here, I want to see us break lows and go. I don't want to see any of this. Well, broke lows, and then the bulls were strong enough to come in and push us back up, and then the bears pushed down, the bulls pushed up, and it's just kind of this back and forth game. So that's when I like to get, in most cases, more aggressive with my stop. Yeah, that's right. Jerome Powell later, almost at the close today, so not really an issue for us. So let's follow the developing here. Now we're at a 550. So with 2 contracts, you're already at a 2.5 point locked in. 2.25 point. Still no full halfway back triggered on the day. We'll get there eventually, and this might be the low that takes us there. But no low tick. So see, still safe, at least on this next leg down. If we get a double bottom, then for sure having the stop above this swing high, right where it is, right above the 61.8, is that quote unquote safe point. Here's the developing 61.8, or the developing halfway back, if you will, meaning it's now we've just hit the negative 23, so you can use that 61.8. It's a 29.0350, 325. And now you're locked in 4 points as a worst case scenario for those who are trading 2 contracts. Or what did I say? Yeah, 4, 2, 3.5. And we follow her down. See, when you get these reversal bars, you're either going to go, like you're going to, if the reversal bar fails, let me phrase it this way. If the reversal bar fails, there's usually a pretty strong move. Because you get a lot of people setting up their trades, and especially when you get a little head fake like this guy here. So passing on that long was a good play. It's a good inaction, I guess you could say. So now we have a pretty big halfway back. Stop is at a 29.0275, but that's really the only point where you can place it without trailing each candle here. So if you had 3 contracts, then that's one thing you could do. You could leave one of your stop placements up here at 275, and then trailing each candle on the way down get taken out right about here. And that's fine. It's fine to get taken out of contracts like along the way, as long as they're beyond 1-to-1. You don't want to be taking off contracts at like 2 ticks. Even if you have a 1 point stop, that's only half to 1. Trading to the next halfway back, stop above the 61.8. If we break lows, I'd bring it down so that it's above this swing high on 902. And then, so at the same time, taking the short up there kind of coincided with breaking the low of this candle, which is technically the high or the low price of the highest bar in the pullback, which only was a one candle pullback, but you broke lows and then you got the follow through right away. We rallied a little bit, but we closed below the prior candle's bar still. Next candle, boom, new low. Next candle, traded up a little bit, but closed below the prior candle's low. And look at these highs. Each candle's high is closing below the prior candle. So there we go. Now we're getting some momentum. So now let's move our stop down to a 2900 and a quarter. That's what I want. So now we're 5.5 points in, and for those with the 2 contracts, 5.5 points in. 3 contracts, if you took it off on this leg down, no big deal. If you trailed both, if you're trailing both above the 61.8, that's fine too. Like, as long as it's more than 1-to-1, ideally closer to 2-to-1, then trying to stay in as long as possible. That's the idea here. You don't want to, like, yes, all of these trades are pretty, and you could have closed out the -23 and then put a trade back on at the 50, and all these would have worked out. But remember, this is just one snapshot, and every time you put on a new trade, you're putting on a full stop out of risk. So I'd rather stay in the trade and not risk both getting stopped out of a new trade, or sometimes, the risk is missing the entry because it comes up close, maybe it touches your order, doesn't fill it, or comes up one tick away, or just doesn't even get close to it. It just kind of bounces a few ticks and then falls off, and there's no re-entry. So that was a good setup here today. Assessing the fact that, okay, if the market's going to go down, it's going to go down from this point. So we'll see if that 2925 holds and rolls over or takes us out. Not really any kind of low ticket lows or double bottom or reversal here. We might see it reflected in the 5-minute bar, but so far so good. A retest of this 50% short is the only weakness in the short we've seen. Coming up, getting a new high tick for the day, but this candle, maybe there it goes. So what was that, a 575 down to a 900 and a quarter, and we may keep going, but you can't put your stop like way up here when you start doing the math and say, okay, well, if I give my stop 4 points of wiggle room or 6 points of wiggle room, well, then it's worth it for me to close out of the trade lower by trailing my stop tighter and then re-entering. Sometimes this happens where you get ticked out and then it drops, but that went all the way to a 50. So catching the meat of the move is the name of the game. You're never going to catch it fully, but you have to keep your risk contained on the way. To put your stop 6 points away and then let it come all the way back. Well, like I said, you're better off being tighter with your stop, taking more profit, and then risking not getting in, but already having locked in that profit, if that makes sense. So we'll see what we get here. That's been the first sign of a potential reversal, but at least on the chart, but not so much on the NYSE tick or the 5 minute. So, but hey, 5 points is still a good move considering the last couple of Tuesdays have been snooze fest or not much going on. I'll take it. Not sure I'm ready to take a long right here. If we break highs, because we're in high ticks. Yeah, David, mind over markets. Is that, who wrote that one? Dalton, right? I think that was Dalton. Yeah, I believe I've read. Yeah, oh yeah, the market profile one. Yep. Yeah, that's got some worthwhile stuff in it. Mind over markets. So he definitely made the right call, or the right pragmatic approach or process of following the 61.8s down. Now we've really broken this last 61.8. So trying to assess things, always thinking in groups, not letting one trade or one trade session make you change your trading strategy or major tweaks based on one or two trades is important. Still in these high ticks. I'm going to draw up the long, not just to know where it is here. See what we get. So going back to those, like the gap fills, you've got people who are either underwater or have become whole again because you've returned to a point where we filled. So let's say at the close on this day here, you put on a long, then you gap down and you held on to it. The reason that we get sort of a bounce or a reversal usually at a gap fill is because then you get a lot of people who are, okay, if I could just get back to break even, then I'll close out. And then the unfilled gaps tend to fill because there's little or no trade within the gap itself. So as the market goes through it, there's not much resistance to push back from. So a 99.75 trades in a slightly lower tick, but not super low. At what are we, 45 minutes in, with a little bit of a reversal bar, but not much. We'll see what it does. At the very least, we got down to a lower tick than where we were up at the high ticks for the day. Needs to go another, there we go. So there's a first target on that one. And then just following the same protocol, if we move up, break highs, there it is. Just trailing the developing 61.8 because there's not really any pullbacks here. So that's a 2950. Same thing, breaking above the high of the low bar here. That's always a good sign for a reversal. Now we're up at the 29.0, we'll call it 0075. Still no halfway back on the day that's traded. If we take highs of the day to lows of the day, that is up at the 06. I didn't draw the first 30 minute. Let's get that up. I have a feeling we're getting close to it. Yep. 2902.75. And that's right where we're at. I don't see anything here, David, from 10.3 to 10.7. I try to use, the swing low and the swing highs as best I can to use as the anchor points. So there goes the 2901. So another few points locked in. Not really a swing low on the way up until right here. And if I draw from lows to highs to see where that full halfway back long, it's right about here. And then we have the bottom of the first 30-minute range above us. Let's get that profile going. So I don't know for sure, Stan. He asked about how do I know if the price will come to the halfway back of the day. Um, we could go the whole day without it coming to any full halfway back from high to low. That'd be rare. At some point, usually the market comes halfway back, unless it's just a screaming trend day at the 45-degree angle down here. All right, so my next short is a 29.01 1/4. So nothing at that short. Back up at that underside of the first 30-minute range. Kind of playing like yesterday where same thing. Came a little bit below the 61.8, a little bit of a head fake, and then shot up there. Bullish engulf, kind of bullish engulfing candle. Didn't quite break the candle's low, but Getting a little sloppy over here. You see the downtrend at 45-degree angle here has started to go sideways. Kind of a little bit of a bear flag, taking a while. And with those tails, we saw a bottom tail here, topping tail, another bottom tail. We've had a couple good trades in there, but it's definitely being met by both sides. Bulls and bears kind of. Breath is -5. Remember, it was -7 at the open. So coming in a little bit, which a divergence there where the breath is going up and the market's going down. It's a sign that we could see a bounce later in the day. And then right back down to lows. So interesting little chain of events here. And pretty close to that daily long failure. 61.8 down here. So Stan asks about trailing the swing high and swing lows versus the developing 61.8. Typically what I'll do is start with the developing 61.8 because the swing high hasn't been put in yet. And then when you get a swing high formed, then you can adjust your stop to that point if you need, and then draw up the next 61.8 or the next retracement to find the 61.8, and then adjust your stop above the swing high when it falls, and then so on and so forth. I'm getting a little bit wild here. I know it doesn't seem like much, but you've got ticks going from close to highs down to close to lows. You get a bearish engulfing candle here, and then we had broke highs by a little bit and then sold off, broke lows by a little bit. Now we're rallying. Kind of want to stay out of this area. Be careful here. Don't need to be giving back everything that you made already. And back up to the bottom of the first 30-minute range. Big V there. So we had a bearish engulfing. Technically, the open was not above the prior candle's high to be a true bearish engulfing, but the candle does engulf the prior one. So I guess technically it's a bearish engulfing, but I like to see the high, the open above the prior candle's high to really engulf the whole thing. Then the next candle takes it all back. Its low isn't quite below the wick low, but it's below the body, or it's tied with the body low, and then comes up here and engulfs the body. And it engulfs all of this prior activity. That was its straight up move here. Now we're back on the downswing, and you could call this a swing low here if you really wanted to get aggressive and do like a 29.0275. But just be careful down here. At least you're at the top of this range. But again, still without hitting the halfway back of the day, that always leaves the possibility to come up there. But 275 does trade, so Yeah, the 275 is a valid short. Now we peaked above these highs here and then still fell back down. So got some gains on the day at the bottom of the first 30-minute range, but a lot of the times at the hour mark or around now, usually the hour mark, you kind of make that move back up to the halfway back short of the day, but without being able to get there, we came 2/3 of the way but didn't make it. You kind of have to assume that, well, the bears are overtaking a little bit. Not much has changed in the breadth and advanced decline line, so can't really glean much from that, other than we're still just as weak as we were prior. Broke the swing low, so if you wanted to get aggressive with the stop and put it at like a 375 just to keep it real tight, you could. Even a 2904. It's not much tighter, only a tick, but 375 brings it down to a point. Well, we did break a swing low back here, even though it's just a one candle low. And anytime you're in an uptrend, higher high, higher low, higher high, higher low, higher high, boom, break a swing low, draw up the short. So valid, sure, and it lines up with the bottom of the first 30-minute range, but got to come down and break this 150 to accelerator down. When it's real small like this, if you don't want to draw the next 61.8 to tighten your stop, you can draw the full. There's the first target. You can draw the full halfway back and then use like a 325 as your stop placement. On 2903. Nice clean touch of that short, and on the way back down. So Stan, this is where, like, at the time you're trailing your 61.8, and then once we break swing low here, we can tighten it to the swing high at 275. So good question. That's yeah, good to clarify that process. And then your stop is below break even, or in positive territory. Double bottom also constitutes tightening, or a double top, but again, you just risk the market coming back up and double topping and taking you out. So now you go to a 29.02 1/4. And in this case, if we were to hit the -23 down here, I'd be okay with taking this swing high down to lows and trailing that 61.8. Not a bad day. There it goes. Back up. And now that we're in there's our touch of the halfway back. Just for you, Stan. Right before that 90-minute mark. So still holding the 6180 as a daily long, and we're right at that 50% of the daily long, as well as the trading hours only halfway back. If we break that, then I would look for us to break highs and fill the gap from yesterday, or the gap down from today. High tick at the halfway back of the day. So no swing low broken. That's what I need to see here at the halfway back of the day to get into a short. 2909 is the 61.8. If we break that, then I would look for us to maybe go a little higher and then pull back to the halfway back long. And then one concern or one thing to watch out for is if we just come up and break by a couple of ticks and roll over. That's been a little bit of the pattern this week so far. And so if it's not a definitive break, we could retrace and then move lower. So right now the swing low is a 525. That would give us a short setup as long as we don't touch the long like so. But this time of day can get a little bit harder as you get a little bit of a slowdown. Usually there's kind of a slide in volume. Today we've had some spikes. Well, a little bit later. But yeah, not a bad morning. Compared to our last few Tuesdays, it has been a little bit quiet. So I think we'll leave it at that for this morning. Some good stuff in there. Thanks for everyone's questions. If you have more, feel free to email me, tim@eminimind.com. And I hope everyone has a great week. And I'll talk to everyone soon.